Hello everyone, this is Crypto BitLaw, here with another blockchain legal brief, and today we're going to discuss recent moves on behalf of the Securities and Exchange Commission and Chair Gary Gensler taken targeting crypto firms. But before we dive in, please, if you like the content, give it a thumbs up and subscribe to our channel. And with that said, let's jump right on in. Okay, so we'll start here with this Decrypt article stating SEC Chair Gensler threatens action against unregistered crypto exchanges. Testifying before Congress on Wednesday, he warned that more actions against crypto firms could be on the way. They say, testifying before a congressional subcommittee on Wednesday, Securities and Exchange Commission Chair Gary Gensler fired yet another warning shot at crypto industry leaders. Quote, crypto exchanges should come in and register, said Gensler. Or frankly, we're going to continue to use what Congress has given us in our enforcement and examination functions. The statement came in response to questioning from Representative Steve Womack, a Republican from Arkansas, who expressed his displeasure at what he perceived to be the SEC's enduring failure to create an explicit set of regulations for cryptocurrencies. Making an analogy to football, Womack cautioned, before an official can throw a flag, do an enforcement action, you gotta know the rules. The SEC has, to date, brought more than 80 enforcement actions against crypto asset offerings and platforms. Gensler argued on Wednesday that such actions were well within his agency's purview, saying, I think the rules are actually quite clear that if you're raising money from the public and the public anticipates a profit based on the efforts of that sponsor, that's a security. But the situation may not be so simple. Historically, the SEC has not clarified which crypto assets it classifies as securities, versus some that it said could be considered commodities, and thus outside of its jurisdiction. In the same congressional session Wednesday, Gensler referred to Bitcoin as a commodity. Quote, Bitcoin, maybe that's a commodity token. Due to the blurred lines posed by cryptocurrencies and crypto assets, many crypto firms fined or subpoenaed by the SEC have expressed frustration at doing their best to follow poorly articulated laws only to later face legal repercussions. To remedy this issue, Gensler last month stated his desire to create a novel registration and regulation process for crypto overseen by both the SEC and the Commodities Future Trading Commission, the CFTC. A process overseen by both bodies could monitor both crypto securities and crypto commodities. Gensler testified before the House Appropriations Committee on Wednesday to review the SEC's budget for 2023. He argued that more resources were needed to adequately regulate crypto. Quote, I wish we had more to be able to dedicate to this. We're really outpersoned. Earlier this month, the SEC announced it was expanding its newly rebranded Crypto Assets and Cyber Unit to over 50 personnel. In his testimony today, Gensler claimed additional resources would be required to protect crypto consumers from unprecedented risks, alluding to the stunning collapse last week of Terra's algorithmic stablecoin, UST, and native token, Luna. Quote, there was one crypto complex that went from like $50 billion to near zero, just within the last 3 weeks, warned Gensler. These are highly speculative, volatile, and I would dare say often the public is not protected. And to piggyback off of that, let's turn to this article by the Daily Hodl. It's titled, SEC Chair Gensler says crypto regulators gearing up to investigate misconduct complaints. They say Gary Gensler, the chairman of the U.S. Securities and Exchange Commission, says that new staff members at the agency will begin to focus on investing crypto-related complaints of misconduct. In a testimony to the Subcommittee on Financial Services and General Government U.S. House Appropriations Committee, Gensler said that crypto markets are increasingly becoming a risk to public investors. Quote, the highly volatile and speculative crypto market has mushroomed, attracting tens of millions of American investors and traders. In 2016, there are an estimated 644 crypto tokens on the worldwide market. 5 years later, that number had gone up more than tenfold. The volatility in the crypto markets in recent weeks highlights the risks to the investing public. Earlier this month, the SEC announced it was nearly doubling the size of its crypto assets enforcement and cyber unit to help keep up with the rapidly growing asset class. In his speech on Wednesday, Gensler said the new addition of new staff would be focused in part on strengthening the capability of the unit and begin investigating a large amount of crypto-related complaints. Quote, "Meanwhile, misconduct in emerging and new areas, from complex security products to new financial technologies to crypto, requires new tools and expertise. The additional staff will provide the division with more capacity to investigate misconduct and accelerate enforcement actions. It also will strengthen our litigation support, bolster the capabilities of the crypto assets and cyber unit, and investigate the tens of thousands of tips, complaints, and referrals we receive from the public." All right, now some points of note. I think first it's worthwhile to say that I think I agree with that congressman from Arkansas that questioned Gensler and made the analogy to football and throwing a flag. It's like before you throw the flag, you have to know what the rules are, and that's a lot of people's concern here. There are no bona fide set of rules. All we have is the Howey test, which can be, in some aspects, a subjective test that I think most people would agree is outdated because it dates back to orange groves in, I don't know, what was it, like the early 1900s? I can't remember the exact date. But, I mean, it's a really old case, that's been interpreted by more modern cases, but still, I don't really think that it's been adapted and refined and honed, particularly for crypto, and I think that that's what we need. And I don't think it's the job to come from the judicial branch. I think that the legislatures really need to step in and do their job and regulate and legislate on these issues and provide a new set of laws and framework that keeps up with these modern times and these new technologies. And then I think that it's also worthwhile to note that Gensler, he's kind of being deliberately vague within the scope of addressing his jurisdictional purview here. And he's kind of straddling the line in between whether or not this SEC has jurisdiction over some of these assets or whether it's the CFTC. And we've seen recently, I think the chair of the CFTC has come out and said that he would like his agency, the Commodities Future Trading Commission, to have jurisdiction over these assets. And so they're kind of butting heads with Gensler and the SEC. And I think that Gensler, he's kind of seceding a little ground here because he realizes, hey, the CFTC actually has a leg to stand on if he's going to come out and say things like the SEC has said before, that Bitcoin is a commodity. Well, then that would fall under the purview of the CFTC. And so he's kind of giving a little bit of ground back and trying to still establish the hegemony and the dominance of his dominion and his exchange commission over regulating the space while not giving up too much, but yet acknowledging that there's another player in the room here, right? And then we can kind of tie this back to the XRP case and the fact that the SEC, they pick and choose their battles. And I think, as we could see playing out in the XRP case, if they think they're going to lose, they're just going to blow the case up rather than actually letting it go all the way and establish bad precedent, or what's commonly referred to as bad law, something that doesn't really go in your favor. And so he wants to avoid that at all costs. And normally these agencies, they pick and choose cases that they really truly believe that they could win in order to establish precedent that will help them to keep winning in the future. And I think the way to combat this is to have, it's got to be a third party with some sort of legitimate conflict or controversy, sue the SEC, get standing, and then have the ability to take it all the way and establish some sort of precedent that would otherwise be bad for the SEC or good for the crypto industry. But, I mean, that could all be mooted out, rendered moot, if Congress legislates this and actually sets up a series of frameworks and laws and procedures in advance of any type of any type of litigation to that end. Because we all know litigation, legal system, it takes forever. So a case like that, it could take years to play out. And we touched on earlier, it's interesting that he has different rules, Gensler does, different approaches for different projects and different cryptos. Whereas he comes out and says, Bitcoin, I look at that more like a commodity. I know in the past he alluded to a similar position for something like Ethereum. But all of these other bags of crypto assets, smart contract platforms, transmission tokens, NFTs, so on and so forth, we don't know. There's no real rhyme or reason or bona fide rule book or framework with which to clarify and classify and regulate this whole other bag of digital assets. We have the Howey test, but it's anyone's best guess how that would apply in certain situations. I think it's certainly more cut and dry in some situations as opposed to others. But like I said earlier, we need something that's solid and set in stone. And I think lastly, Gensler makes some points about how it's his goal and his agency's mandate to protect individual investors and consumers. But, I'd like to contrast that to what happened recently with the lockdowns on CeFi lending platforms like Celsius and BlockFi, and limiting access to those platforms to accredited investors, which I guess for the sake of convenience is an investor with a serious bankroll, bigger players in the game, not just little plebs like you and me. And so, I agree, especially after what happened with Terra and the fact that blew up. I personally wasn't invested in Celsius or BlockFi. I always thought that 10% on stables, it seemed like there was too much risk in order to get that 10%. But at the same point in time, I still think that if we're going to let people, individual plebs, get wrecked on margin trading, take margin, and that's fine, or you can go out and you could gamble, that's cool too. You should be able to take a risk in putting stables in a CeFi lending platform and getting 10%. We're going to ban that. We all know why they're banning that. It's clearly that's big banking interest and big finance. It's their interest being expressed in terms of that regulation. But I just think that's hypocritical. But yeah, this is the state of I guess impending regulations from these three-letter agencies and arms of the administrative state. So hopefully you guys got something out of this. I hope you enjoyed this content. If you did, please give it a thumbs up and subscribe to our channel. And with that said, thanks again for watching, and we'll see you all in the next video.